Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, I'm going to give you an update on BNGO, that's Bio Nanogenomics. They just reported earnings, so I wanted to give you my thoughts as well as my BNGO stock price prediction for the end of 2021 and the end of 2022. So let's jump in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the description to my Patreon account. Come over and join the family. I'd love to have you. You'll get access to the private Discord where we talk stocks. You'll get to check out 5 portfolios that I've got over there. And then anytime I buy or sell a stock, or I'm mapping out a chart, or I've got a swing trade or a crypto trade, I send that out as well. So if that's something you're interested in, if you want to, grow the channel with us and be part of the Day One Squad, come over. We're trying to build an amazing community over there. Day One Squad, you guys know that I love you. Thank you so much for your support. But let's get started. So BNGO. This is, I'm going to admit, guys, I'm a bag holder. I bought this stock back in like February, January, when it was running way too hot, and I bought it at the top. I'm going to chuck that up to, at the same time, my dad had just got diagnosed with cancer. He had a tumor in his neck. So I wanted to support the cause. I wanted to, push the industry forward. Who doesn't want to invest into a company that's trying to cure cancer? So nonetheless, I bought it. The reason why I haven't sold it yet is because I do see some potential. So today I wanted to kind of give you my bear argument, my bull argument, so you can kind of see both sides. I wanted to look at the stock chart with you and then give you my price prediction for the end of the year and end of next year. But we'll look at the highlights, we'll look at the earnings, and we'll see what we think. So first thing I wanted to show you guys is the earnings report. So back on May 13th, you can see here that Q1 revenue beat expectations with over 2-fold rise. You can see that the revenue grew 178.9% year over year to reach 3.2 million. Now, we've talked about in multiple videos when it goes from 1 million to 3 million, having a 200% increase isn't that great, but nonetheless, they still grew. So that's good to see. Now, after 4 straight quarters of contractions, the company only returned to growth in Q4 2020, recording a 43% year over year growth. The gross margins did improve. That's a good thing to see. We need to see higher margins because they've been losing a ton of money for a long time. So the gross margins have improved to 33% from 25% in the previous year. R&D remained flat at 2.7 million, while SG&A expenses rose 29.3% year over year to 9.5 million. Now, despite a 14.4% year over year rise in loss from operations to 11.2 million, the net loss has dipped 5.4% year over year to 9.9 million, driven by a 1.8 million gain on debt extinguishment. Their cash and equivalents have improved to 362 million, recording 841.7% growth from 2020 year end. Obviously, they did that big cash raise, guys, when they issued all those shares because the stock price ran up so high. Any good CEO is going to take the opportunity to raise a bunch of money when the stock price goes from a literal penny stock in November and December to a $13, $14 stock in January and February. So he made a good move there. They needed the cash. I think it puts them in a really nice position where they've got, a decent amount of cash on hand right now because they've got like a $44 million a year cash burn. And by doing that capital raise when the stock price was that high, hopefully they won't need to do additional raises in the future before they get profitable and start generating cash flow. We'll just have to wait and see on that, but I think that was a good move. The other thing was the company highlighted its milestone for 2021, including a target to reach an installed base of 150 systems to achieve a 50% year over year increase by year end. So guys, there was good things that they're doing. Let me kind of give you some of the highlights. Like I said, they're currently at 107 systems, installed of that Sapphire, device. They're trying to get to 150 by the end of the year. Like I said, I have gone much further in depth on the system, on the product, on the device in other videos. So I will link that above so you can check that out if you want to see me go much further in depth on the actual company. But in Q1, they expanded into new areas. I mean, they went into South Africa, Greece, Russia, South Korea, and then even clinical sites like the United Kingdoms and Germany. They also had multiple colleges and hospitals adopt the Sapphire device, including the University Health Network in Toronto, which is the largest diagnostic lab in Canada. So they're getting some institutional awareness. They're getting some big colleges, some big universities to actually start using that Sapphire system, and getting its name out there. I think the more people, here's the other thing. In 2020, they kind of changed up a little bit their model because the Sapphire device is like 150 grand, and it's not just a one-time purchase. It's like the printer ink type thing. You buy the printer, you got to buy the ink. Which is great for BNGO because it creates reoccurring revenue, but it's not great for the clinics that are looking at it as $150,000, one-time charge, and then they've got to spend thousands and thousands of dollars every year for the consumables and the refills. But they implemented a system where you can now rent it, so their customers can come to them and say, okay, I need X amount of, consumables or refills or whatever they call them, and BNGO will say, okay, you can rent this every single month. We'll give you the refills. And I think that's a very crucial part of what they need to be doing to get it out there into more areas, more people using it, more tests. They also had some really nice, studies and stuff come out. Like a doctor at Penn State also announced a method for solid tumor analysis using the optical genome mapping, which is the Sapphire device, which unlocked the largest oncology market for the Sapphire, which is huge. So they're opening up new markets, they're expanding into new areas, they're doing a lot of really great things. The other thing that I liked was there was a doctor at the Cancer Center that published a study showing how the Sapphire significantly reduced the time to results from weeks to 4 days. So the device is useful. Nobody can deny that. When you're looking at traditional methods, taking weeks to get results back and taking days, that's huge. The price point's expensive, but the new rental program, I think, can help them tremendously. They really need to start implementing new sales systems to get it out there further. With this big amount of cash that they got from that raise, I think they can do that. Now, here's kind of my bear argument. So about 3 years ago, a attorney at the SEC asked the CEO of BNGO, if the Sapphire system is so good, why are the sales so low? He pretty much responded and said, just like all of the other life science medical device companies at this stage in time, our penetration is low. 3 years later, or where we are today, the sales are still low. So that is a very, very big concern. They're at 107 systems trying to get to 150 by the end of the year. They say that their total addressable market is 8,500 devices. That is a huge number. Now, can they get there? I have no idea. But from the looks of it, at 107 to 150, that would take a very long time to get to 8,500. So we'll just have to wait and see what happens. The other thing is in the United States, they don't have a medical device license that you absolutely have to have. They can still sell the software, but they have to put a statement on every single one of them that says that the device is for research only and it is not for diagnostic procedures. So the reason why that's an issue is because insurance companies will most likely refuse to cover it, lowering any appeal for any health clinics or healthcare providers. Because why would a healthcare provider want to use that Sapphire system if the insurance company is not going to pay for it? They would rather use a system or a method that the insurance company will pay for. But I don't see that as detrimental because they can get and they can pursue a license in the United States, especially with this big cash position that they just got. They are licensed in a ton of other countries in Europe and all these other areas. So again, it's not detrimental, but it is a concern nonetheless. So now I want to look at the projected revenue for the end of this year and the end of next year, give you my price target on those years. Then we'll take a look at the chart and we'll wrap it up. So as you can see here, guys, the projected revenue for the end of 2021 is 16.41 million. Okay. They've done a total of 10.5 million in the trailing 12 months. Their outstanding shares is currently 278.85 million. So what we'll do here is we'll use a price to sales ratio. So if we take the current share price at $5.52 and we times it by the outstanding shares, what that will do is that will give us our market cap. You can see here that it's 1.5 billion. So if we take that 1.5 billion and we divide it by the trailing 12 months revenue of 10.5 million, that will give us 146 as the price to sales ratio. So the trailing 12 months revenue is at a price to sales ratio of 146 times. So if we take that 146 and we times it by the projected revenue for the end of 2021, which is the 16.41 million, what that'll do is that'll give us 2.4 billion for the total market cap. We divide that by the outstanding shares of the 278.85. That gives us $8.62 for the price target by the end of 2021. Now, if we take a look here, the projected revenue for the end of 2022 is 29.34 million. So again, we'll take that same 146 times 29.34 million. That gives us 4.2 billion. Divide it by 278.85. That gives us a price target of $15.36 by the end of 2022, which, guys, I think those price targets are more than reasonable. I don't think that they're overshot. The average price target from analysts is around $10 to $12. I think that's right there in line. If we take a look at the chart here, you guys can see, I mean, back in December, it was a 50-cent stock. It ran clear up, it gapped up, hit this demand area, and bye-bye, straight to the moon, straight up, pulled back, straight up, and then straight down right here in the middle of February. Did come down right here on March 5th to kind of retest this area where it gapped up right around here in the middle of January. But you can see, I mean, it kind of came down and it held right here in March and April. Then it got pushed down past its mid-March low, and then look what happened, short squeeze, boom, popped way up, went from opened at like $5, ran all the way up to a high of $7.62, at the end of April, and then boom, straight down. It did kind of hold support right here, though, where it started to kind of gap back up back in the beginning of January before it went to the moon. But it has just been getting crammed by these moving averages. It is holding support at the 200-day moving average, and it is trying to get up over the top of the 20-day moving average. Guys, just like with all the other stock charts we look at, we got to see it get up above these moving averages and start making higher highs and higher lows. But as you can see, our price target for the end of 2021 is only about right here in this little area right here on these gaps. You're going to run into some more resistance up here in between this range. I don't think this entire range is going to serve with no resistance. It'll just go from the top to the bottom right away. That's not going to happen. But you can see you started to get some bullish divergence right here. You did start to make a little bit of an up move with the earnings report. But you're starting to get a little bit of positive momentum right here. I think you're getting a lot of seller exhaustion. And I think that shorts, know that if they keep pushing it down further, this is exactly what's going to happen again. You're going to get another short squeeze. The reason why I'm choosing to hold this stock, even though it's clear down here, is because I did cost average down and bring my cost down a little bit. But I do see potential, guys. I'm willing to take the little bit of the risk, the lot of risk, because I do think by the end of 2021, we very well could see the stock price up around that $8, $9, $10 range, which would be over the top of my average cost, which would be positive, and I have no problem with that. Now, do I think it's going to get up here around the 15 by the end of 2022? I think that's very dependent on how they execute their business moving forward. If they can get out there, they can get the license in the United States, they can get those units sold, then absolutely. This is a hype stock. It is a momentum stock. If the market starts pushing it up, it's going to move up. If the market wants to keep it down, it's going to stay down. But I do think that there's enough hype around this stock that on the sign of strength, any positive catalyst. As the market starts to turn around, we could easily see it get back up towards the upside. Overall, though, guys, if you don't have a position in it, I don't think that this $4 or $5 price range is too bad. I would wait and see if it'll get rejected right here at the 20-day moving average, come back down and retest the 200-day. Because if you can get it down here in this demand area around $4.50, much better price point, I think you have decent upside. Even if you go from $4.80 to $8.40, that's doubling your money almost. Not a bad investment at all. Now, for those of you that bought it up there at the $10 range, like I did, I think that patience, will prevail on this stock, and I do think that it has enough positive moving forward that we can get back there and a little exceed it, but we'll just have to wait and see. But that's my thoughts, guys. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon if you want to be part of the Day One Squad and join the family. Have a wonderful Sunday, and I'll see you guys in the next one. Peace.